Saturday night, and we're back to give you all that's happening inside the corporates and startup world. I'm Shrestha Tiwari and you're watching Companynama. Over to a quick recap of this week's corporate world updates. Billionaire tycoon Gautam Adani's group is looking to raise $1 to $1.5 billion for financing new green energy projects in the conglomerate's biggest borrowing since the group came under attack from US short seller Hindenburg in January. The group recently held a roadshow in Singapore, followed by another two-day roadshow in Hong Kong, talking to global financial institutions for the fundraising. Sources with the knowledge have said, according to reports, the group highlighted that there was no rating downgrades in the aftermath of the Hindenburg report. And a mega deal has been struck in the FMCG sector. Leading emerging markets company Godrej Consumer Products on Thursday announced the acquisition of FMCG business of Raymond Consumer Care, a leading player in the deodorants and sexual wellness categories in India. The cost of acquisition up to 2,825 crore rupees. Along with the FMCG business, Godrej Consumer is also acquiring the trademarks of Park Avenue, KS Kamasutra and Premium through a slump sale. And the country's fourth largest IT company, Wipro, has announced buyback along with the quarterly results on Thursday evening. This buyback will be through the tender route, and the buyback price is at a premium of about 19% from Thursday's closing. Earlier in January 2021, Wipro had completed the process of share buyback of 9,500 crore rupees. The company completed its biggest ever buyback of $1.7 billion in 2019. In 2016, the company had completed a buyback of 2,500 crore rupees, and in 2017, 11,000 crore rupees. Although the results that have come have been slightly weaker than expected, the company's fourth quarter rise is 0.7% to 3,075 crore rupees. Hinduja Group entity IndusInd International Holdings emerged as the sole bidder for Reliance Capital at an auction held by the creditors. The group offered 9,510 crore rupees in the first round, which was raised to 9,650 crore rupees in the second round. Hinduja's offer was 1,000 crore rupees more than what Torrent Investments offered in the first round in December. Meanwhile, Torrent Investments and Oaktree Capital, who had earlier indicated that they would participate in the process, did not submit any bids. American Tower Corp is now open to selling a majority stake in its wholly owned Indian unit, or offering even up to 100% ownership and exiting the country after its recent efforts to sell only a 50% stake failed to find any takers. The US tower companies learned to have re-engaged with Canada's Brookfield, which is evaluating a full buyout. It has also tapped US infra fund Stonepeak for a $4 billion valuation, while potential buyers differ on price. ATC India portfolio includes 76,826 towers as of December 2022. Well, that was all about corporates. Over to our special segment on those companies that were on the radar this week. Let's take a look. Market regulator SEBI has banned 3 individuals and life insurance corporation employee Yogesh Garg and his relatives from buying, selling or dealing in securities either directly or indirectly until further order. The case pertains to LIC front running, where the 5 entities confiscated illegal gains of 2.44 crore rupees front running the trades of the insurer. All of them were found to be connected through family relations, the regulatory body said in an interim order on April 27th. One of these 3 individuals, which is Yogesh Garg, has been an employee of LIC since 2011. And in a significant move, Google has paid the entire penalty amount of 1,337.76 crore rupees imposed by the Competition Commission of India in its October 20th ruling last year in the Android case. The entire penalty amount has been deposited in the Consolidated Fund of India within the 30-day time period stipulated by the National Company Law Appellate Tribunal. Remember that NCLAT had on March 29th upheld the penalty of 1,337.76 crore rupees imposed by CCI on Google for its anti-competitive conduct in the Android ecosystem. The improvement in the balance sheet of Vedanta Resources, the holding company of Vedanta Group, seems to be happening at the expense of its key operating firms such as Hindustan Zinc. Hindustan Zinc has turned from a debt-free company to an indebted one in FY23 on net basis. For the first time in more than 20 years, the metal producer gave all its accumulated cash reserves through a special dividend last financial year and was forced to borrow additionally to fund its capex plans. Also, the promoters of Vedanta Limited have trimmed their stake in the mining and resources company by over 1.5% in the latter half of March, publicly available shareholding data shows. Vedanta Netherlands Investments, a promoter group company, has reduced its stake in Vedanta Limited from 1.71% as of December 31st, 2022 to 0.13% as of March 31st, the data shows. Meanwhile, the government is likely to oppose a plan by Hindustan Zinc to buy out Vedanta's global zinc assets unless the valuation of the assets is brought down to more realistic levels, the Economic Times had reported. The Securities and Exchange Board of India on 25th of April issued an order cum show cause notice to Amit Goenka, chairman of SL Group, Shirpur Gold Refinery, promoter Jainir Infra Power, Multi Ventures and 5 others for alleged fraudulent practices and manipulation of financial statements. The regulator has directed them to not dilute or sell their holdings in the company. In an interim order, SEBI noted that Shirpur had allegedly created a scheme to divert funds from debtors to entities of promoter groups. SEBI has given 21 days to Goenka and the others to file responses or objections. Vodafone Idea has accused Reliance Jio and Bharti Airtel of predatory pricing with their unlimited 5G offerings. Vodafone Idea has called upon the telecom regulator TRAI to act against Reliance Jio and Bharti Airtel, saying that being significant market players, they cannot offer 5G for free, and that too for an unlimited time. This was reported by the Economic Times. TRAI sought responses from Jio and Airtel, and both of them have denied the allegations leveled by Vodafone Idea. Both of them have also argued that they are not offering 5G for free as it is being given out of as a part of the 4G packs. Well, that was all about corporate world. Moving on to the big updates from the startup world this week. Walmart-backed Indian digital payments app PhonePe is gearing up to launch its new app store in India. Reportedly, the fintech giant is working on a localized app store for the Indian market. According to a TechCrunch report, PhonePe has confirmed that it will be launching an app store in India. Currently, Google's Play Store dominates the Android app store segment in the country. The report also states that PhonePe's app store will offer a premier experience for millions of users in India and will also provide support for 12 Indian languages and 24/7 live chat. PhonePe claims that the company is in talks with multiple original equipment manufacturers or phone manufacturers. Talking about Google नहीं बोलेंगे. The Delhi High Court on Monday ordered the Competition Commission of India to take up the complaints filed by Alliance of Digital India Foundation, a group that represents Indian startups, against Google's new in-app billing policy. The court asked the CCI to consider the complaints by April 26th, when Google's new billing policy is scheduled to become operative. This comes as a major relief to digital startups in the country. In its petition to the Delhi High Court, the Alliance of Digital India Foundation, whose members include the companies like Paytm, Matrimony.com and MapMyIndia, had alleged that Google was engaging in anti-competitive conduct by implementing the user choice billing system. And with that, it's a wrap on Companynama this week. See you again next Saturday with more from the corporate and startup world. Have a safe weekend and don't forget to tune into Money9.